Welcome friends. So now let us discuss about your section 15 subsection 4 where you are talking about seeing the principal valuation rules. We are not talking about special valuation rules, principal or the basic valuation rules. When you are going to see your basic valuation rules being your rule 27 or rule 28 or rule 29 or that the case may be 30, 31. You are going to see all these valuation rules in a scenario where either the transaction between the supplier and the recipient happens to be a related party transaction, or the price is not the sole consideration, which means that there is some non-monetary consideration. So either it is a related party transaction or there is some non-monetary consideration. If either of these two conditions are if either of these two scenarios exist, which means either you are talking about a related party transaction or you are talking about non-monetary consideration. In either of these scenarios, you are going to jump to your valuation rules. So being 27, 28, 29, 30 and 31. Now friends, when you are going to see rule 27, let us see the applicability. When you are going to see rule 27. Friends, rule 27 you are going to see whether the entire consideration or part of the consideration happens to be non-monetary consideration. See, what is the point that they are trying to tell? If the consideration is not fully in money, which means that is non-monetary consideration, this portion of non-monetary consideration can be full or partial, which means either it is entirely non-monetary consideration in kind, or it is monetary consideration plus some non-monetary consideration. So either it can be entire non-monetary consideration or it can be monetary consideration combined with non-monetary consideration. Friends, in that scenario you are going to see rule 27. Now when are you going to see rule 28? Rule 28 you are going to see when the transaction happens to be between your related persons or distinct persons. If it is a related party transaction or distinct persons, you are talking about branches with two separate GST number, that is distinct person, same company but branches with two separate GST number. In that scenario you are going to see rule 28. Friends, here we are not going to discuss about agent. Principal agent will come separately. Principal agent is covered in your rule 29. So when are you going to see your rule 29? When the transaction happens between principal to agent. We are talking about schedule 1 agent, the agent which we are calling it as a special agent who is having the authority to raise the invoice under his own name. He may or may not disclose the name of the principal. So you are talking about schedule 1 agent. So 27 non-monetary consideration is there, go to 27. 28 you are talking about related party transaction or distinct persons transaction, please go to 28. 29, if you are talking about principal agent transaction, please go to 29. So that is how you see the applicability of 27, 28 and 29. Now friends, before going to 30, 31 we will see later. First we will compare all these three rules 27, 28, 29 and we will take it together. So first we will try to see what is this 27 trying to tell. 27 has got 4 steps, 28 has got 3 steps and 29 has got 2 steps. Now first, the moment we complete 27, 28 and 29 will be quite simple. So let us first see 27. Now 27 tells that if at all you are talking about price is not the sole consideration, there is some non-monetary consideration, whether full non-monetary consideration or partial non-monetary consideration. In such a scenario, 27 gives you answer in 4 steps which you have to follow in sequence. You have to follow in sequence. First you have to see 27A, if not successful 27B, if not successful 27C, if not successful 27D. Friends, you have to see that in a particular sequence. Only you have to follow this particular sequence. You cannot take anything. You have to follow this in a particular sequence. See, selecting 27, 28, 29 may happen randomly depending on the situation. If it is a principal agent transaction, go to 29. Related party transaction, go to 28. Distinct person transaction, go to 28. Non-monetary consideration, go to 27. That selection will happen in terms of situation. But when you are inside 27 or 28 or 29, you have to remember that you have to follow the sequence. You cannot jump. You have to follow the sequence. Within 27, 28, 29, you have to follow the sequence. Now let us see 27 again. That is non-monetary consideration. Now first you are going to try 27A, if not 27B, if not 27C, if not 27D. There are 4 steps. Now first step talks about open market value. Open market value of such supply. Open market value of such particular supply. Now you can see the infographics where you are talking about something very identical. identical, both are identical. So when you're talking about open market value, you're talking about supposing you're evaluating this transaction. If you're not finding the answer for that, you see something very identical transaction, open market value. And friends, open market value, the term is defined. Let us see what is open market value of supply. Open market value of supply means full value in money. It should be a case where it is fully in money, 100% monetary consideration, excluding GST. Value always excludes GST. Full value in money excluding GST. So value will include all other taxes but exclude GST. So excluding GST is a very common point, where supplier and recipient are unrelated person and price is the sole consideration. Friends, understand that if I am doing a valuation for a particular transaction and if it is doubtful, when I am telling doubtful, you are not going with section 15.1, 15.2, 15.3, you are going to section 15.4, 15.5. If it is doubtful, I have to refer some other transaction. I am trying to do valuation of transaction 1, T1. It is doubtful. It is not fulfilling the condition. So when I am doing that valuation of T1 transaction, if I am referring to other transactions, say T2, that is you are talking about that may be open market value or value of like kind and goods, value of like kind and quality goods. It may be either or. Now, when I am referring to the other transaction 2, that other transaction should be neat and clean. That is what they are trying to tell. The other transaction that I am referring to. The moment I am failing to do valuation of transaction 1 T1 in terms of section 15.1, 15.2, 15.3, which is simple, transaction value plus certain inclusions minus exclusions. If I cannot do that, if I am removed from that, I am going to refer some other transaction, say T2, that T2 should be neat and clean. That transaction 2 should be neat and clean. That is the reason they are telling that transaction 2, for transaction 1 you are referring to transaction 2. For finding out the value of transaction 1 you are referring transaction 2. That transaction 2 at least should be neat and clean. It should be unrelated party transaction plus price should be the sole consideration. Right. Now, what are they trying to tell? They are telling that at or about the same time when you are talking about such identical transaction, if it had happened, refer to that transaction. If you are failing to find out transaction 1 value on the basis of 15.1, 15.2, 15.3 and you are going in 15.4, when you are referring to transaction 2, that should be neat and clean. Unrelated party transaction plus sole consideration transaction, and that transaction should happen at or about the same time when transaction 1 happened. So when you are referring to transaction 2 for the purpose of transaction 1, you are trying to find out the value of transaction 1 based on transaction 2. That should be more or less identical, exactly the same item or same service should be there, plus that transaction 2 should be neat and clean, unrelated, plus you are talking about sole consideration, plus it should be at or about the same time. So in a simple language, you can tell that you are talking about identical. You are referring to transaction 2 which is identical, very exactly same as transaction 1. But even though it is exactly same as transaction 1, please check for few things, that it should be unrelated party transaction, sole consideration is there, and it has happened at or about the same time. That is all about your open market value. Open market value. So if I am selling this particular pen, this is transaction 1, and this is where I have sold this pen, it is my related person, or you are talking about a scenario where it is I have got non-monetary consideration against this pen. I have not got monetary consideration, I have got non-monetary consideration. In that scenario, I am going to, supposing it is a non-monetary consideration scenario, I am going to go to rule 27. I have sold you this pen, but I did not get money from you. I got non-monetary consideration, something in kind you gave me. You gave me something in kind. That in kind may be a gift, right? That gift may be a phone or a writing pad, etc. Something in kind you gave me against this particular pen. Now, when I am seeing this rule 27, I have to first try open market value. Now, I may have sold the same pen a day back to someone else for money. Now, for transaction 1, I am referring to transaction 2. Right, that transaction 2, I am going to sell this pen regularly. For that transaction 2 should be neat and clean. It should have happened with an unrelated party, plus I should have got everything in money, plus it should have happened at or about the same time when this transaction is happening. At or about the same time is subjective, maybe few days here and there. Then for this transaction, I can refer the value which I have adopted for the old transaction. Right, so that is nothing but your open market value. You are talking about two transactions. This is transaction 1, where I have sold the goods to Mr. X, but he is paying me non-monetary consideration. He is giving me non-monetary consideration. Non-monetary consideration. Right. There is another transaction. Same item I have sold to Mr. Y. And this Mr. Y gave me monetary consideration, 100% monetary consideration. This is transaction 2. Now friends, understand that transaction 2 valuation would have been under section 15(1) itself. Right. Supposing I have sold it for say rupees 100 excluding GST. Right. Section 15(1) itself, it would have been over. It would have been over. Transaction 1. This valuation will not happen in section 15(1), it will happen in section 15(4) read along with rule 27, because that is non-monetary consideration. Where step number 1, rule 27A talks about your open market value. For this open market value, I am going to refer the previous transaction which was neat and clean. Which was neat and clean means price was, it was unrelated party transaction plus price was sole consideration plus it happened at or about the same time. So here answer for this case is also rupees 100. Right. So there were two transactions. One was a very simple transaction where I sold the goods, I got monetary consideration, it was valued under section 15(1), rupees 100. Now the second transaction, I got non-monetary consideration, therefore I am under section 15(4). I cannot go for section 15(1), rule 27. Rule 27A talks about open market value, where I am going to see the previous transaction, whether it was between unrelated person, price was a sole consideration, and at or about the same time, then I am going to refer that. Right, that is the point. That is the first step, open market value. Now friends, if at all, there may be scenario where I am not able to find open market value. There may be multiple reasons, because it may happen that I don't have any such sales at or about the same time. Such similar transaction it had happened long time back. So there may be reasons where I am not able to find out open market value. If at all I am not successful in first step, then I have to go to second step. Then what they tell? In the second step, they tell that if at all you are not successful in open market value, please go to second step. Second step talks about whatever consideration in money you have received, take that, plus add monetary value of non-monetary consideration. So if you are able to find out the worth of the non-monetary consideration, if you know the real value of the non-monetary consideration, you can go with the second step. Understand, second step I will see only if there is no open market value. I am not successful in first step. If I am successful in first step, I am not going to see second step, third step, fourth step. Assume that there is no open market value, then I have to go with the second step. What it tells, take the monetary consideration. If at all you have received something in money, take that, plus add the market value of non-monetary consideration. Now let us take an example. Now supposing there is a transaction 3. Which is happening. Now in transaction 3, supposing I am selling to Mr. Z. Now this Mr. Z has paid me again non-monetary consideration. He has given me monetary consideration 50 rupees plus some non-monetary consideration. Right, some non-monetary consideration he has given. Say, let us assume that this is transaction 3. Now, understand that valuation will be under section 15, subsection 4, rule 27. Why? That is non-monetary consideration. The moment you see non-monetary consideration, you jump to section 15, subsection 4, rule 27. Now, the first step that you have to try is 27A. Assume that there is no open market value. The item that I am selling, assume that there is no open, if there is open market value, you are not going to step number 2. Assume that there is no open market value, then you go to step number 2. Now what is the step number 2? Now how can be a scenario? Now you may ask why there is no open market value. Now assume that this item that I am selling is a customized item, customized product. This is not a simple pen that I am selling. I have customized, I have made some changes, customized product. That is the reason, that may be one of the reasons why there is no open market value. Now in 27B, you have to see what monetary consideration, what is the monetary consideration that I have received. The monetary consideration was rupees 50 plus, if at all you know what is the worth of this non-monetary consideration, what is the market value or the money value of this non-monetary consideration. Supposing this non-monetary consideration happens to be a pencil. right, a new pencil, a brand new pencil, and I know that the worth of this pencil is say rupees 40. I know it's a brand new pencil and I know that the worth of this pencil is rupees 40. I am able to assess the market value or the money value of non-monetary consideration. It is subjective. This will happen only if at all that non-monetary consideration is a new product, first condition. Second, it is the market value of that product is easily available. In that scenario, I am going to add that particular 40 rupees. So the answer will be 90. The answer will be 90. Right. So this is the second step. Second step only if you are not successful in first step. Now what was the first step? First, try to go with open market value. You have seen the definition of open market value. If not, try evaluating your second step, consideration whatever monetary consideration you have received plus money value of the non-monetary consideration if it is known at the time of supply. If you are able to assess the market value of that non-monetary consideration. If you are not able to assess that, please go to step number 3. Now what is step number 3, friends? Step number 3 is value of such goods or services which are of like kind or quality. You are talking about goods or services being like kind and quality. It is a step lesser than open market value. In open market value, you are referring to the exact same item when you are referring to other transaction. Here you are not referring to the exact same item, you are referring to another product, another transaction where the item is not exactly the same. You can see with the picture where the item is not exactly the same, but they closely resemble. Right, if you see the infographics for the first step, it was open market value means exactly the same. Second step, consideration in money plus market value or money value of non-monetary consideration. Third step, you are referring to a transaction where the items that you are selling now and the items that were sold in the other transaction are not exactly the same, but they closely resemble. Say for example, I am selling iPhone 5, right, and there is some non-monetary consideration. I am trying step number 1, not successful because there is no open market value. Example, assume that. Step number 2 also not successful. Step number 3, there is another phone, iPhone 5s. Now it is not exactly the same, but it is resembling. It is highly resembling, like kind and quality. You may call it as like kind and quality. The products are not exactly the same, but they are of like kind and quality. You may take the reference of another supplier also. Supposing you are talking about a phone, say of Micromax phone, you may refer to a phone which is not of the same brand. You may refer to a phone of Lava company or some other company. But it should be falling within the definition of like kind and quality. It should be falling within the definition of like kind and quality. Now what is the definition of like kind and quality? If you see the definition of like kind and quality, it tells supply of goods or services of like kind and quality means any other supply of goods or services which are made under similar circumstances. They are made under same, exactly similar, not same circumstances, but similar circumstances where the characteristics, quality, quantity, functional components, materials and the reputation are either they are same or closely or substantially same. Either they are exactly the same or they are closely or substantially resembling. Now understand, in open market value there is a very less chance that you refer to the product of competitor's company. You may refer, but very less chance. You are referring to identical product. But when you talk about like kind and quality, there is a high possibility that you are valuing for a particular company, for a particular brand. And if you are failing to value that, you may refer to another brand. You may refer your competitor's product. Now, when you are talking about competitor's product, right, it is made under similar circumstances. The character is the same, quality is the same, quantity is the same, functional components, materials are the same, reputation is the same, closely or substantially, either they may exactly be resembling or closely or substantially they are resembling. Say for example, you are talking about a paste called as Colgate. Now assume that it is covered under 27, just for understanding, assume it is 27. You have tried 27A not successful, 27B not successful. Now you may refer to Pepsodent. You may refer to find out the value of Colgate paste. You may refer to the value of Pepsodent, where you have to prove that it is fitting under the category of like kind and quality. They are made under, the supply is made under, it is some other supply of goods or services. It is not exactly, you are not supplying Colgate, though you are valuing Colgate, but you are referring Pepsodent. So it is other supply of goods or services, but made under similar circumstances, where you find character, quantity, quality, functional components, materials, reputation, though they are not exactly the same, but they closely or substantially resembles. Right? That is the scenario. That is the scenario. I repeat again, in open market value, normally referring to the competitor's product will not be so easy. But in like kind and quality situation, you can easily refer to the competitor's product price. You can easily refer to the competitor's product price or the same product, I mean same company's another version, a small, slightly higher version or slightly lower version. Like the example that I gave for iPhone. Either you can refer the competitor's product, or within your own product list, there may be a slightly higher version or slightly lower version, you can even refer that. Right. That is about like kind and quality. Like kind and quality. It is something lesser than open market value. Or if I go a step ahead, you can always refer to as open market value as identical. Exactly same. Exactly same. The same product you are referring to. Same item, same product. Obviously, it will be of the same company. Whereas if you are talking about like kind and quality, you are not talking about identical, you are talking about similar. They are exactly not the same, but high resemblance is there. High resemblance is there. Right. So, by that virtue, you can refer even your competitor's product or even your own products with a slightly higher or lower version. So, that is possible. Right. Now, coming back to the fourth step. Now, what is step 1? If there is non-monetary consideration, whether partly or wholly, first step, open market value. If you are successful, fine, don't go to second step. If you are not successful, second step, monetary consideration plus money value of non-monetary consideration. If you are successful, fine. If not, go to third step. Refer to goods or services with like kind and quality features. Like kind and quality features. Now, if you are not successful there, assume that there is no open market value. You are not aware of the monetary value of non-monetary consideration. You cannot find out the worth of the non-monetary consideration because it is highly fluctuating. You are not sure of it. Plus, there is no like kind and quality goods services. Then you go to the fourth step. What does that fourth step tell? Fourth step is again very similar to second step. Consideration in money, that is monetary consideration plus monetary value of non-monetary consideration. So, it is sounding very similar to second step, but that's a small change. But that monetary value of non-monetary consideration, you don't know at the time of supply. You are trying to find out in terms of Rule 30-31. You are trying to find out in terms of Rule 30-31. See the difference. Here in second step, it was monetary consideration plus monetary value of non-monetary consideration. If you are aware of the same, if you know it, if you are easily finding out the money value or the monetary value of non-monetary consideration, if you know the market value of non-monetary consideration very easily. If you don't know that, first you try step 3. Then when you come in step 4, monetary consideration plus monetary value of non-monetary consideration, you don't know the real worth of the non-monetary consideration, but you are trying to find out in terms of Rule 30-31. You are trying to find out that in terms of Rule 30. Rule 30 is cost based, 110% of cost. 31 is best judgment. You are just giving it to the best judgment. You are not sure of it, but to the best of judgment, out of 4 values that you are getting, you are trying to select one. That will be actually selected only by the officer. Best judgment is normally selected by the officer when he is doing his assessment. Right. So, there is a small difference. Now, let me explain this with the help of this example. Assume that in this scenario, this non-monetary consideration, the example that we took for the second step, this non-monetary consideration, you are not aware of the market value. You don't know the market value. You are not aware of the market value of the money value. Market value or the money value, it is you are not aware, because it may be a case where it is a product which is rarely dealt with, or it is a second hand product. There might be multiple reasons. Say one reason could be that non-monetary consideration is a second hand item. Non-monetary consideration is a second hand product. So, you are not aware of exact what is the market value of the money value. You don't know. You are not aware of it. Now, obviously, this transaction, as there is non-monetary consideration, you will go to section 15.4, Rule 27. You try Rule 27A. Assume that there is no open market value. I have said the reason, maybe it is a customized product. Maybe it is a customized product. Therefore, you don't have open market value. You don't know the open market value. Fine, understandable. You don't know the open market value. Second, you also don't know the market value of non-monetary consideration. So, you are not aware of market value of non-monetary consideration. Therefore, you cannot go to step number 2. Assume that as it is a customized product, assume that there is no like kind and quality goods or services. So, highly possible when you talk about customized product, you are not getting any like kind. Customized product is a very peculiar product. You may customize your product in such a way that others have not done. So, you don't have any like kind and quality goods, like kind and quality goods or services. Or you may have it, but you are not aware of it. There may be like kind and quality goods or services, but you are not aware of it. You are also ignoring 27C. So, even that is not there. Now, what you have to do? You have to go with 27D, where it tells that take the monetary consideration. Take the monetary consideration, which is 50, plus market value of non-monetary consideration, which you are not aware of it, but go in terms of rule 30 first. If not, then go in terms of rule 31. Assume that you know the cost of this non-monetary consideration. You don't know the market value, but you know that this cost was, say, 30 rupees. You know the cost. You don't know the market value. You know the cost. That person who's giving that non-monetary consideration, you know that he has spent around 30 rupees. You know the cost. So now what are you going to do? You are going to take this 50 rupees plus market value of non-monetary consideration as per rule 30. Rule 30 tells that 110% of the cost. So 110% of 30 rupees, which will be 50 plus 30, 383. Right. If now you may tell that sir, what if cost is not known? If cost is not known, don't worry. Here, if at all, I am telling, if you know the cost, go with rule 30. If you can ask the opposite party and tell that, see, this is second item, I don't know the market value, I cannot go by step number 2, tell me the cost. If he tells the cost, then you can go as per rule 30. Rule 30 tells that 110% of cost. So 50 rupees plus 110% of cost is you are going to get 83. If you tell that, sir, if cost is also not known, obviously the opposite party may not give the cost details. Then you have market value of non-monetary consideration as per rule 31. Don't worry. Then you have market value of non-monetary consideration as per rule 31. Best judgment. You apply your judgment and see what will be the market value of non-monetary consideration. It may be 35, 40. You have to apply. That is very, very subjective matter, but to the best of your judgment, you have to apply that. So even that is possible. Friends, these are the 4 steps that you have to go through while finding out the valuation in terms of rule 27. Step number 1, when rule 27 is applicable, first of all, when the consideration is either wholly non-monetary consideration or monetary consideration plus non-monetary consideration. Right. First, go for open market value. You have seen the meaning of open market value. You can call it as identical. If not, go for monetary consideration plus market value or money value of non-monetary consideration. If you know the value of non-monetary consideration at the time of supply, if you are able to assess the market value or the money value of non-monetary consideration, if you can easily find out that, right? If not, then go for goods or services of like kind and quality. If not, then go for step number 4, which is very similar to step number 2, but with a small change. Monetary consideration plus money value or market value of non-monetary consideration, but not in terms of, you don't know the market value, money value of non-monetary consideration. You have to find out that market value, money value of non-monetary consideration in terms of rule 30, 31. You'll find that based on cost or based on best judgment in the infographics. That is rule 27. Friends, once you are aware of rule 27, you are aware of the terms also, what is open market value and what is this like kind and quality. Another important thing is 28 and 29 now becomes very, 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 very simple. 28. When is rule 28 applicable? When is your rule 28 applicable? Friends, rule 28 is applicable if the transaction is between distinct persons or related persons, but other than principal agent. We are talking about distinct persons transactions or related persons transaction. Right. So this is a scenario where you are talking about either distinct persons transaction, that is branches of the same company with different GST number, or related party transaction. We have seen the meaning of related persons in levy chapter. Right. Now, when you talk about that, how to find out that? If you are aware of rule 27, you can get the answer of rule 28 just like that. Now, what was the step of rule 27? You have to go for open market value, same here. Step number 1 is the same. You have to go for your open market value. Step number 2 was all about monetary consideration plus money value of non-monetary consideration. That is not there. Now, step number 3, remove step number 2. Out of these 4 steps of 27, please remove step number 2. Please remove step number 2. You remove step number 2. What was step number 3? There step number 3 here will become step number 2. What is step number 3? It was like, kind and quality. It was like, kind and quality. You go with that. And what was the last step? Last step was monetary consideration plus money value of non-monetary consideration. Friends, here we are not talking about any non-monetary consideration. So forget about that. Here directly go with rule 30-31 in order. Go with rule 30-31 in order. If you are not successful, first try cost based rule 30, 110% of cost, or 31 best judgment valuation. But friends, that will be, you are not going to 30-31 directly. You are from 28C, reference is given to 30-31, which means that valuation will still be under 28C, but the spirit will be of 30 or 31. Valuation rule will be 28C, but the spirit will be taken off 30 rule 30-31. So when you talk about 28, there are 3 steps. Remove step number 2 from 27, you will get 28. 3 steps, 28A, 28B, 28C. You have to follow in sequence. First is open market value, then it is like, kind and quality, and finally you are talking about your rule 30, reference to rule 30-31. That is cost based, or you are talking about best judgment valuation. 30 is cost, 110% of cost, and 31 is best judgment valuation. Now, other few small changes that are there. What are the few small changes? Here you have a very special provision, There is something called as deemed open market value, which is not there anywhere. Deemed open market value. If at all recipient is eligible for full input tax credit in case of distinct persons transaction or related person transaction, then whatever value you put on invoice will be accepted as deemed open market value. Now for distinct persons or related persons, they give a relaxation. There might be a case that open market value is 1 lakh rupees. But if at all the opposite person may be the branch of the same company with different GST number, or the related person. If the opposite person is eligible for full input tax credit, if the recipient can take full input tax credit, whatever value you take, you will pay at output tax, and the opposite party will take full input tax credit. So what they tell, if the recipient is eligible for full input tax credit, then whatever value you want, you can put, and that will become deemed open market value. Let us understand this with the help of an example. Supposing there is a transaction between VJ and PJ, related party transaction, right? Related party transaction. Now this is a related party transaction. You are seeing rule 28. Now if at all you are talking about open market value, assume that the open market value of the product, of the goods or services, assume that the open market value of the goods or services which is given, goods or services which is supplied by VJ to PJ, open market value is say 1 lakh rupees. So in both the cases I have taken open market value as 1 lakh rupees. Now first of all, you have to understand that this case directly will go under rule 28. It will be valued under section 15 subsection 4, and it will go under rule 28. Rule 28. If at all you are going with rule 28A, you are going to go with open market value. So in both the scenarios, you have to understand that this being a related party transaction, it will be under section 15 subsection 4, and you are going to go to rule 28A, open market value. But what is the open market value, friends? It is 1 lakh rupees. Now if I tell in the first scenario, the recipient PJ is eligible for full input tax credit. In the second scenario, PJ is not eligible for full input tax credit. Either it cannot take credit, or it can take credit but proportionate credit. Either no input tax credit or proportionate input tax credit, but it cannot take full ITC. Now in the first case, they tell that you can ignore what you can ignore. You can ignore the open market value, which is 1 lakh rupees, and you can go with deemed open market value. Whatever value you give on invoice. If you give on invoice the value as say 5,000 rupees, go with 5,000 rupees. If you give on invoice the value as 10,000 rupees, go with 10,000 rupees. If you give on value 1,000 rupees, go with 1,000 rupees, etc., etc. Whatever value you give on invoice, that will be accepted. Why? VJ will pay the output tax and PJ will take the full input tax credit. So, in the first scenario, they are pretty clear. They are pretty clear in the first scenario. They tell that what you adopt any value. You adopt any value as it is a related party transaction or distinct person transaction and the recipient is eligible for full input tax credit. You need not go with open market value, you go with deemed open market value. Whether you give on invoice 5,000, it will be accepted, 10,000, it will be accepted, 1,000, whatever value you give on invoice will be accepted, deemed open market value concept. But if I tell that the recipient is not eligible for full input tax credit, related party transaction, but the recipient is not eligible for full input tax credit, then I don't have an option. I have to go with the open market value only 1 lakh. I cannot go with any value. I have to go with the open market value only. I cannot go with deemed open market value. I have to go with open market value concept only. So this benefit of deemed open market value, first point is applicable only in Rule 28. Second point, it is applicable if the recipient is eligible for full input tax credit. So here we have introduced a concept called as deemed open market value. That is only and only applicable in Rule 28, and that too if the recipient is eligible for full input tax credit. Full input tax credit. So that point you have to understand. Right. So you have open market value / deemed open market value, Rule 28A, 28B, like, kind and quality, 28C, Rule 3031. You have to follow the sequence, first 30, then 31. But for services it is difficult to find out the cost. So they give a relaxation. If at all you are talking about supply of services, you may directly go to 31, ignoring 30. See, what is step number 3? Go as per Rule 30 first, then 31. So for goods, go as per Rule 30, then 31. But if it is services, for services finding out the cost is very difficult. Therefore, they tell that if it is supply of services, then you may ignore Rule 30, you may directly go with 31. Step number 1, open market value, deemed open market value. Step number 2, like, kind and quality. Step number 3, 30 followed by 31. But if it is supply of services, you may ignore 30, you may directly go to 31. That is all about your Rule 28. Now friends, when you talk about Rule 29, it talks about what? It talks about principal agent, supply between principal and schedule 1 agent. Now, if you want to understand this, from 27, 4 steps, you remove second step, you got 28. From 28, remove the second step. From 28, remove the second step, like, kind and quality, you will get 29. Simple. From 27, remove the second step, you will get 28. From 28, remove the second step, like, kind and quality, you will get 29. So here there are only 2 steps. Step number 1 is open market value, 29A, which is nothing but you are talking about open market value, exactly the same identical goods or services you are referring to. And second, you are talking about like, kind and quality is removed. Remove the second step means like, kind and quality is removed. Go with Rule 30 followed by 31. You are talking about Rule 30 being 110% of cost and 31 being best judgment. So from 27, remove the second step, get 28. From 28, remove the second step. What was the second step in 28? Like, kind and quality. Remove that. You will get 29. So in 29, there are only 2 steps left out. What is the first step? Open market value, that is 29A. 29B, you are talking about go if at all you are not able to find open market value, please go as per Rule 30 or 31. Rule 30 or 31. And friends, what is this 30, 31? We will see once. What is this 30? We have already discussed that. What is this 30? 30 is nothing but 110%. 30 is nothing, Rule 30. This Rule 30 talks about 110% of the cost. If you are a manufacturer, 110% of the cost of production. If you are a trader, 110% of cost of acquisition or purchase. If you are a service provider, 110% of cost of provision of service. For a manufacturer, 110% of cost of production or manufacture. For a trader, 110% of cost of acquisition or purchase. For a service provider, 110% of the cost of provision of services. That is 30. And friends, 31 is simple, to the best of the judgment. Any reasonable means you can take. That 31, I have already said, normally best judgment will be actually done by the officer. It is called as best judgment assessment, or at the time of best judgment assessment, the officer may opt for best judgment valuation as well, or without even best judgment assessment, he may opt for best judgment valuation, to the best of the judgment of the officer. So any reasonable means consistent with the principles and the general provision of section 15. Best judgment, to the best of the judgment. Best judgment means to the best of the judgment, but there should be some rational or logic behind the same. He cannot tell any number. There should be some rational or logic behind the numbers that officer is selecting. So that is that. Now friends, understand that 30-31 may be directly opted at times. Directly you may select 30-31 in certain cases. If at all value is not determinable, if you are not able to determine the value by way of rule 27, 28, 29, you may directly go to 30-31. Normally directly going to 30-31 very rarely will happen, but it may happen. It may actually happen. When it will happen, we will discuss that. It may happen that you directly select 30-31. Right. So either you from within the provision of 27, 28, 29, that is 30-31, but you are working within the provision of 27, 28, 29. When are you going to go to directly 30-31? It is possible. It is possible. Supposing you are talking about a case. Let us take a scenario where you will go to directly 30-31. Supposing you are talking about a scenario where Reliance Limited has given gifts of free samples to Tata Limited, and at the time of purchase, Reliance Limited has taken input tax credit. So when it is giving free samples or gifts, it has to pay output tax. It is nothing but you are talking about deemed supply schedule 1. Deemed supply schedule 1, permanent transfer or disposal of business assets on which ITC is availed. Now friends, there is no consideration. Here you have to understand that there is no consideration. Consideration itself is not there. There is no consideration. Now when there is no consideration, when you are doing valuation, when you are trying to do valuation, you are not covered by section 15.1, you are covered by section 15.4. Section 15.4. Why? Because to be covered in 15.1, the unrelated party transaction should be there. Yes, they are unrelated party transaction. You are talking about unrelated party transaction, and price should be the sole consideration. How you can tell that price is the sole consideration? It is not that, because consideration itself is not there, so price is not the sole consideration. So you are jumping to section 15.4. 15.1 is not applicable. 27. Whether 27 can be made applicable? No. Why? Because there is no consideration. Forget about non-monetary or monetary consideration. There is no consideration. 28. Not applicable. Why? Because it is an unrelated party transaction. 29. Not applicable because they are not principal agent. So you will go to directly rule 30, rule 31. First you will try to apply rule 30, 110% of your cost. If it is if Reliance Limited is a manufacturer, 110% of cost of manufacture. If you are a trader, 110% of cost of purchase or cost of acquisition. If you are a service provider, 110% of cost of service. Right. If not successful, then you will go for best judgment valuation. So sequence is important. First 30, then 31. First 30, then 31. This is a classic example where you are talking about deemed supply as per schedule 1, para 1, where you are talking about free samples gifts to unrelated persons. It is deemed supply, no consideration. Therefore, you are going to go to section 15 subsection 4. Because price is not the sole consideration, but 27 is not that, 28 is not that, 29 is not that. You have to go with 30 and 31. And friends, again they give a relaxation here. Normally first you have to try 30, then 31, but if it is service sector, then you can ignore 30 and directly you can go to 31. So that point is given. If at all you are talking about supply of services, you may opt directly for 31, ignoring 30. For manufacturer and trader, always first try 30, then try 31. For supplier of services, you may try 30, 31, or if you don't want, ignore 30, directly go to 31. For a manufacturer of goods, trader of goods, you don't have an option. First try 30, then try 31. For a supplier of service, you may ignore 30. If you are able to find out, okay, well and good, but if you don't want, ignore 30, directly you go to 31. So that is the point. Now friends, we are actually done with this 27, 28, 29, 30, 31, but there's a small point that is left out. What is the small point? There is an optional valuation. There is an optional valuation which is applicable only and only for 28 and 29. Which is applicable only and only for 28 and 29. Optional valuation. It is not applicable for 27. Optional valuation is applicable only for 28 and 29. Now what is that optional valuation? If the goods are intended for further supply. First of all, it is applicable only for goods. Second point, it is intended for further supply means the person the person to whom you are selling goods, he is further supplying as such. He is a trader. I am selling the goods to you. So first of all, coverage is only of goods. Service is not covered. Second point, you are trying to find out my value. I have sold you the goods and you have further supplied. You have not done any manufacturing work on it. You are a trader. You are a trader. Then for my valuation, I can adopt 90% of the price charged for that supply of like kind and quality goods made to the unrelated persons. Now let us try to understand this with the help of example and complete that optional valuation. Complete that optional valuation. Optional valuation, friends, first of all, it is applicable only for 28 and 29. Optional valuation. Forget about the steps. What is optional valuation? Forget about the steps that were there. Forget about the steps. In 28 there were 3 steps, in 29 there were 2 steps. Forget about the steps. So friends, when you talk about your optional valuation, there are certain important points that you have to remember. First, optional valuation is applicable only and only for Rule 28 and Rule 29. To be very specific, it is applicable only for related party transaction, distinct person transaction or principal agent transaction. Second point that you have to remember, it is applicable only and only for goods. There's one more point that we'll discuss. There's one more point that we'll discuss, but that we'll discuss finally. Now let us take an example. Supposing I have sold the goods to my related person, PJ, VJ to PJ, and PJ is selling the goods to unrelated person. Now this is a related party transaction. This is unrelated party transaction. Now I have sold the goods to PJ for say 50 and PJ has sold the goods to unrelated person say for 100. Say for 100. Now understand the difficulty. My valuation will not be under section 15.1, it will be under section 15.4. Section 15.4. In this specific scenario, related persons means Rule 28. And valuation of PJ will be under section 15.1 itself, because unrelated party transaction and price is a sole consideration, and for him the assessable value will be directly rupees 100 directly. So there is no difficulty for valuation of PJ. Why? Price is a sole consideration and unrelated party transaction, you are going with section 15 subsection 4. You are directly going with section 15. You are going to section 15 subsection 1. Assessable value is equal to transaction value 100. So there's no difficulty. There's no difficulty. The difficulty is there only and only for sales by VJ to PJ. That is that difficulty. That is the difficulty. Why that difficulty is there? Because it happens to be a related party transaction. Now if it is a related party transaction, friends, as discussed, the valuation will be under section 15 subsection 4. You have to see Rule 28. In Rule 28, I have an option. See, I can go with 3 steps of Rule 28. 1, you are talking about open market value, then like, kind and quality, then finally Rule 30-31. That is first option. I am ignoring this option 1. I am not going with option 1. I want to go with option 2. I want to go with option 2. Now, if at all I want to go with option 1, 3 steps were there: open market value, like, kind and quality, and 30-31. Option 2 tells that, okay, if you want, you can ignore that. What you can do? You have sold to a related person, but that related person has sold to unrelated person. You take his value, you take his selling price. So, assessable value will be, you take his selling price 100. You don't take your selling price 50. You take selling price of, you don't take your selling price 50, you take selling price of the next person 100 multiplied by 90%. Multiplied by 90%. So value answer will be 90. Now first point that we have discussed is, this is applicable only and only for Rule 28, Rule 29, that is related person, distinct persons and principal agent. We have taken the example of related person. Second, it is only applicable for goods. You cannot apply it for services. Only and only for goods. You cannot apply it for your services. It is not applicable for services. It is applicable only and only for goods. And third important point, this PJ should be a trader. VJ can be anything, because this for VJ you're taking the valuation based on PJ's price. How you found out the value for VJ? You went for option 2. In option 2, assessable value for transaction of VJ was equal to selling price of the next person PJ multiplied by 90%, which is 90. So this PJ should be only and only a trader. The second party should only and only be a trader. The second party or the recipient, who's the second party or the recipient on the basis of whom? The second party or the recipient on the basis of whom we are trying to find out the value of supplier. The second party or the recipient. The second party or the recipient. Because for VJ, PJ is the recipient, on the basis of whom we are trying to find out the value for the first party, supplier, that is VJ, should be a trader. He should not be doing manufacturing. He should not be doing manufacturing because he has to supply the same goods as such. Whatever he has taken from VJ, he has to supply as such. Only then VJ can take the recipients, that is PJ's selling price, and find out his value. Take the next person's selling price multiplied by 90%. The next person, that is the recipient, you may call it as next person or the recipient or the second party, he should be only a trader. Friends, we are trying to find out the value for VJ, but it is based on selling price of BJ. We are trying to find the value for VJ in optional valuation, but it is based on the recipient's further selling price. The recipient's further selling price. So 3 important points or 3 important observations. 1, applicable only for 28, 29, not for 27. Not for 27. Second, applicable only for goods, not for services. Third, that second party or the recipient on the basis of whom we are trying to find out the value, taking his selling price multiplied by 90%, should be a trader. Should be a trader. That is optional valuation. Friends, if I were to write the difference between 27, 28, 29. 27, 28, 29. Right, when you talk about these 3, there are certain differences. First, 27, situation is non-monetary consideration. 28, you are talking about related persons or distinct persons. 29, you are talking about principal agent. 27, the value, you are talking about the transaction can be that of goods or services. In here also it can be that of goods also as well as services, but principal agent, the transaction is only and only of goods. 27, there are 4 steps. 28, there are 3 steps, and 29, there are 2 steps. Next, when you talk about 27 and 29, you don't have the concept of deemed open market value, which you have only in case of 28, which you have only in case of 28 in the first step. You have the concept of deemed open market value in 28. Next, when you talk about 27, you don't have the concept of optional valuation, but for 28 and 29 you have the concept of optional valuation. When I tell friends optional valuation, I am trying to tell that you can ignore these 3 steps or 2 steps and you can go for this optional valuation. You can go for this optional valuation. That is the differences between this 27, 28 and 29. Right. We are done with the basic valuation rules or the general valuation rules, right, starting from 27, 28, 29. Also we have said that at times directly you will go to 30 and 31. See, when you are seeing 30, 31 within 27, 28, 29, you are not actually shifting to 30, 31, you are seeing the spirit of 30, 31. But there is a possibility where you actually go to 30, 31. There is a possibility where you actually go to 30, 31. You have taken that case. Gifts of free samples to unrelated person, neither covered by 27, nor covered by 28, nor covered by 29, directly to 30, 31. Now, if I want to tell that in which sequence you have to see the valuation rules, when you are selecting 27, 28, 29, when you are selecting 27 or 28 or 29, or that the case maybe we say even 30, 31, selecting depends on the situation. Selection of 27, 28 29, 30, 31 depends on the situation. It depends on the situation. There is no sequence. There is no sequence. It is not based on sequence. It is not, you are not going to see sequentially. You are not going to see sequentially. Depending on the situation, you are going to see. But when you go within this 27, there are some steps. 28, there are some steps. 29, there are some steps. 30, 31, you have to follow the steps. So here, friends, you have to follow the sequence. Within 27, there are 4 steps that you have to follow in sequence. 28, 3 steps that you have to follow in sequence. 29, 2 steps that you have to follow in sequence. When you are going to 30, 31, you have to follow the sequence. But the sequence, for supplier of goods, you have to follow the sequence. For supplier of services, directly you may select 31. For supplier of services, directly you may select 31, ignoring 30. So that you have to understand. So we are done with your general valuation rules. All the ifs and buts we have covered.